The aftermath of Fed Day results in a lot of healthy charts out there. Tackle today, Matt and Mark Justice from Tackle Trading, bringing you all of the charts, the analysis, so that you can, in a few minutes, be informed with everything that's going on in the market. Matt, futures started taking off after a wobbly session yesterday with the Fed, where they cut 50 basis points. Let's talk about that Fed right off the bat. Big points, big highlight points. 50 basis point cut came in. All of those whispers that had been out there in the previous days showed to be true. The dot plot also followed suit, a dovish dot plot where numerous cuts were priced in from Fed members, whereas the June dot plot was very, very hawkish. This one was very dovish. And Powell, who caused a little bit of market volatility while he was speaking and saying sensible things like, we're not just going to give you 50 basis points every meeting. Well, no kidding. And then he used a lot of other measured language. But I think the quote from him was, the U.S. economy is in a good place, and our decision today is designed to keep it there. I think that was the general message, and I think the market picked up on that, and I think you're seeing the aftermath of that today. Matt, what were your thoughts on the Fed?
Yeah, there was a healthy debate coming into the Fed regarding the 0.25 versus the 0.50, and it does look like Jay Powell got his wish. Should I say Janet Yellen got her wish with the 0.50 cut, but it wasn't just the cut, Mark. And if it was just the cut, that would be one thing. But the way he talked about the economy, the way he talked about inflation, the way he talked about their decision to cut rates, and what was fairly dovish, I would say, it's outright confidence, I would say, on some of the economic conversations. But it was the guidance that was far more dovish than what I was expecting. And I think that's where that what is really kind of driving the market here today is you're seeing a little bit of the Fed's got your back again. And we have not seen that. The Fed's got your back. We've been fighting the Fed. The market's been fighting the Fed in this pausing cycle. The market's been fighting the Fed in the rate hike cycle. The Fed's got your back after that policy statement yesterday. I don't know if the Fed put is back in play, but there is a philosophy that the Fed is being a little bit more aggressive than anticipated, and that's going to lead to a little bit more bullishness in the market. And when you are looking at it from a technical perspective,
well, and before we get into the technicals, I would just like to point out, you and I always say the Fed is not a one-day event; it's a two-day event, right?
No, 100%.
It's not a one-day event.
And I say it all the time. There's moments during Fed Day that you have to understand, right? And there's three different things. You have the immediacy of the algorithm move, and the immediacy of the algorithm move is not necessarily going to tell you a whole lot, given the fact that you see this algorithm move yesterday, right when the Fed comes out and announces monetary policy. The first 1 minute on the chart, Mark, was up a good 50 points. That's algorithms, but that has absolutely nothing to do with what is actually transpiring. And then you see the press conference here a little bit. You see it kind of start to wobble a little bit, but then on the overnight action, it settles in. And that's when you start to see the move here, is when it starts to settle down coming out of that volatility. And then from the overnight action, from when the Japanese markets opened to when the Europeans market opened, both the Japanese markets, the European markets, both gapped up, started trending up. That started putting a nice little trend on the overnight action. And then when you had the cash open here earlier this morning, it actually got gobbled up on the cash open, but you have seen some additional volatility since then. But I think that's more understandable given the fact that, you're having a pretty good day and you're just kind of settling in at the top end of the price. But it is, in general, when I am looking at the technical backdrop, you got a good breakout on the S&P 500 against a multiple time frame situation. RSP has shown a little bit of weakness against the S&P. That's because you're seeing an oversized price movement on the NASDAQ here.
I mean, it's always, if you're seeing RSP versus S&P show relative weakness, it's because
it's always a tech move.
It's always tech.
Yeah, it's always a tech move. And we were sitting in the lounge yesterday and we were talking about the areas of the market, and we were fully expecting separation following the central bank. The markets were running on exactly the same gasoline before the central bank. Now tech is showing some leadership here following the central bank. And so we are seeing it's very early in the conversation, but very early we are seeing the separation to the Qs, which is kind of where we thought it was going to happen yesterday in the lounge. And so we are seeing oversized price movement in the Nasdaq. SMH semiconductors are firing off a little bit here today. On the flip side, you're seeing a little bit of gap up and then hesitation analysis on IWM. If you are looking at small caps, you do like the fact that you're at that 225 zone, and you would love to see some development at 225. The same way we got development against that really good technical breakout on the S&P 500 with a little bit of consolidation going into the Fed. And so it's, if there's a area of the market you like, it's probably doing okay here today. I do think tech kind of leads immediately coming out of this event. We'll have to see what trends transpire coming out of this, but this is a market move. You're seeing a lot of price action to the top side. It's a little bit of dealer's choice, but obviously we're seeing a little bit of tech outperformance right now.
Yeah, and obviously we're going to be looking at secondary pattern watch. One of our big theses on this is markets have been running on the same gasoline. You're going to start to see separation in quality of patterns. Those quality patterns we will be all over for our pro members in the trading lounge and in our newsletter and traders report on the weekend. Matt, it's very much a macro week if there ever was one. But there's always a few stocks trying to poke their nose into the news cycle.
They're trying. They're trying. This is a macro day. There's no doubt about that. But we do have a couple stocks in the news. Darden Restaurants announced earnings here today, and they did come out with a little bit of a miss against EPS. They also announced a slight, and I mean slight drop in guidance. They also announced a new partnership with Uber, starting with Olive Garden. So you had a little bit of a mixed report out of Darden, but this is not a mixed day to report earnings on. And so Darden, I would expect this would have been a doji or a slight downward movement in price. But again, yeah, the market's parting a little bit today, like it's at least early today, like it's 1999. So Darden gets the gap up love, but they gapped up right into a resistance level. I'll show you that here in a second. Alibaba is the only Chinese component on the Tackle 25 this year, and they gapped up as well as they released over 100 different open source AI models, which they're saying is better than Meta and OpenAI in language processing. And so we'll have to wait and see on that there, Alibaba. But obviously, anytime you have a oversized tech move and you start releasing information on the AI side of the equation, you're going to get a little bit of love in that environment. And Baba certainly is here today. And then NextEra Energy Partners, not NEE, but NEP, they are attempting to reverse after Jefferies initiated coverage with a buy rating, citing the company's $3.75 billion in buyouts. That's not stock buybacks, that's buyouts. They're already priced into the market itself. And so let's take a quick peek at these stocks from a technical perspective. And let's start with that Darden gap up on earnings. Like I talked about, you had a little bit of a trend going into it. You gapped up into resistance. I see this as a exhaustion gap where I would expect the gap to fill simply because you did not have a great earnings report. You gapped up with the market. You started showing weakness right at resistance. I would expect a little bit of fading action on Darden. Baba is breaking out. Tough to catch on Baba, given the fact that it's an ADR and it trades on the overnight action. But Baba gapped up here today on that positive news. And quietly, Baba is starting to trend really decently over the course of the last 2 months or so. You look at this on a weekly chart, you're talking about Baba trying that ultimate reversal as well. Something to keep an eye on if you are looking at Baba is that overhead right around $90. That's kind of that top shelf in that overall longer duration reversal that Baba has attempted multiple different times. And then another attempt at a reversal here coming from the low point, NEP trying to gap up, and but it has a little bit of challenge right around that 28 level, given the fact that that is the 200-day moving average there as well.
Yeah, listen, this is not just a stock move right now. This is a market move. Seeing a lot of healthy price action. Dollar holding its support level, but basically everything else Right. I mean, at this point, man, you just expect the dollar support level to hold, don't you?
I do. I I do believe the 0.50 was built into the dollar.
I think there was enough measured. Hey, we're
But
not going to just obliterate with
the
with
the thing is, if it was just the interest rate conversation, though, we would have sold off and we would have broke down. But Powell painted a message that was not, we're lowering interest rates based on
he
the
did a good job.
economy.
He did a good job defending the
And
dollar in
and
that speech.
and that's the defense of the dollar that I was expecting, and that's what I thought would occur here, because the Fed is fully aware that what could transpire not only on the US economy, but from a global economic perspective, and the pressure the dollar would put on other economies if we start breaking and running to the downside. It would have a net negative effect on the US. It would have a net negative effect on the global market. And Mark, if you think about the best markets in the history of the last 40 years, for example, the global synchronized markets of 2013 through 2020 really do stand out. And so I fully expected the Fed to support that. With the 0.50, with the dovish guidance that was more than expected, you would expect a gap down and a sell down. But with the strength of the economy coming through the message, it was enough to hold it through. So yeah, I do expect it to hold. And if it does hold, you're going to see capped price action on gold to a certain extent, meaning you're not probably going to get a massive upward movement in price in the short term. Doesn't change my philosophy on gold. I still like gold. I like gold at the 9 EMA. I like it with confirmation again above the previous resistance, which we're dancing against right now. So I'm not trying to paint a picture that this is negative for gold. It just will, if the dollar doesn't sell aggressively and break that level, the path of least resistance is back up, and that would put a little bit of pressure on gold itself. Not necessarily silver or copper, given the fact that they are industrial metals and they can run on the economic conversation as much as anything else. And you're seeing oversized price movement on silver here today. You're seeing a little bit of oversized price movement on copper here today as they confirm an overall resistance. And so whether you're looking at copper, whether you're looking at silver, both look pretty good. Both, not both, but silver tested the 9 EMA over the last couple days, and now you're just kind of navigating a little bit of choppy overhead resistance level on silver. Copper has a little bit more open air, certainly caught the 9 EMA as well. Look at that clean bounce off that 9 EMA. And so commodities look pretty good. Dollars hesitating at support. We'll see what transpires with the dollar over the course of the next week or so.
Listen, we'll continue to break it all down. We'll be scouting out the next level of trades in our Traders Lounge. Be sure to sign up for the upcoming Master Trader if you are a pro member. And if you are not a pro member, sign up for that 15-day free trial. Not only do you get the newsletter this weekend, not only do you get our Traders Report picks this weekend, not only do you get to attend the lounge with us every day, but you get to attend that Master Trader event for free. Learn technical analysis. It will make you money. Have a wonderful day, everyone.